I think that the FTX failure has actually been a catalytic event, and it's been good for Bitcoin. I think it's really highlighted the strengths of proof of work, highlighted the strengths of a network based upon Bitcoin mining that's a commodity. I think there's been a lot of confusion about the difference between proof of stake and proof of work. And tokens like FTT token were based on staking algorithms and the like, and they weren't backed by energy. So the FTX failure has been a very visible educational event that's educated an entire generation of lawmakers, policymakers, journalists, and investors as to why Bitcoin is different than FTT token or Terra or Luna or Serum or these other air tokens. And it also really underscored the benefits of an asset you could take self-custody of without counterparty risk. So although it's been painful for the industry, I think it's actually catalyzed a lot of positive developments, both in the education of investors as well as in the DC regulatory environment, and generally what I've seen throughout all of the coverage is a growing appreciation for the benefits of Bitcoin and Bitcoin mining through this kind of debacle. Everybody that Bitcoin mining is the price you pay in order to eliminate that counterparty risk that you otherwise have to take on. It's important to note that the security of the Bitcoin network, it comes not just from the operation of Bitcoin mining data centers, but it also comes from the shipment and upgrading of Bitcoin mining equipment and semiconductors. And so you've had a couple of companies that have dominated the industry. And you've got Bitmine, you've got WhatsMiner, but to have Intel enter with a lot of capital and a lot of commitment, I think is a good thing. It creates a strong North American-based semiconductor manufacturer that is committed to Bitcoin and Bitcoin mining. I think it'll be good politically for Bitcoin in North America to have Intel behind it. I think it'll be good for Bitcoin miners to have another strong vendor to choose from that'll create more competition at the equipment layer. And I think it creates more resilience in the Bitcoin network because you never want to be dependent upon just a small number of equipment manufacturers. So the more you have and the more diversified, then the more decentralized the network is. So I see this as it's a welcome improvement of decentralization and resilience, while at the same time it undermines narratives that the equipment is sourced out of China, and ultimately what you really want is you want a strong Chinese equipment manufacturer to encourage everybody in the China sphere of influence to trust Bitcoin. And you like a strong North American equipment manufacturer to encourage everyone in the Western world to trust Bitcoin. And it's always good to have choices for negotiation if you have to buy the equipment. So I think the result of that is great for the network. And then the last point is it will accelerate the improvement in network efficiency, both the energy efficiency. It'll drive us down the joules per terahash curve faster with another aggressive investor and equipment manufacturer. And I think it also helps us build a mechanical advantage of ASIC technology versus general purpose CPU technologies. And as the ASIC technology advances, that creates a mechanical advantage for Bitcoin security. And ultimately, that's very auspicious for the entire network and the asset class. I think if we're back to Moore's law again, it's just important for people to remember that proof of work is a security protocol based upon two inputs: raw energy or electricity, and then also semiconductor hardware hashing capacity. And what's happening is that the hashing capacity, the ASIC efficiency keeps improving. And it's, as Ben pointed out, it's improved by 5,800% over 8 years. it seems to be marching up at 15% a year, somewhere between 15 and 20% a year. It might slow down or go faster from time to time, but you know, when you're running at that level and you start to think about the exponential impact, what you can see is that we're in the middle period, I think, of Bitcoin mining. I think the early years, like the first few years, it was very energy intensive. You know, back when you saw those non-ASICs, when you didn't have ASICs using CPUs and GPUs, it was on the margin more energy intensive and used raw power. And we're in the middle years where it's kind of half energy. The story is half energy, and the other story is half technology. And then if you roll the clock out more than 20 years from now, if you go out 30 years, between 30 years and 60 years, there'll be a point at which the network is secured more by the special purpose technology, and to be dominant in Bitcoin mining, it's going to be a capital intensive, technology intensive exercise, and your ability to get energy is going to become less important. Now, mind you, not in the next decade, but the implications is the network morphs from energy intensive to technology intensive. And I mean, a simple analogy would be if you go to the agriculture industry, when people they didn't have tractors and internal combustion engines, everything was labor intensive, and you had an army of people farming. And then machines came along, and eventually, if you're a farmer, you better have a tractor, because it doesn't matter if you have 10,000 people. What matters is if you have the equipment to manufacture the food. So I think, I mean, Bitcoin's right in that middle period where energy matters and technology matters, and now there's a little bit of a race, you know, and the question is how much faster will the technology evolve? And with the entrance of Intel, it kind of suggests the technology is going to evolve faster than it would have otherwise evolved. And you know, eventually Bitcoin mining is a technology industry, and Bitcoin is secured by technology. And that's really good, because what that means is that over time, the security cost of the network is going to fall with the improvement in technology. And that's important. When you get to $100 trillion on the Bitcoin network, you don't want to have 20% of it staked, you know, like in a proof of stake network. What you want to have is billions of dollars of special purpose equipment that secures all of the monetary assets, and it secures it 1,000,000 times more efficiently than general purpose equipment. And that's what's going on right now with ASIC semiconductor technology advances. And ultimately, it's a good thing for Bitcoin. It's a good thing for Bitcoin miners. It's a good thing for anyone that's going to be a technology leader in the space, like Hive, that's embracing, you know, Intel and variable clock rate machinery. I mean, this is the future of the industry. You know, once upon a time, it's a question of how hard could you work and how cheap was your labor. But clearly, that's not an industry you want to be in long term if you're smart.